Just like the snow is piling up this time of year, so is the inventory. Hey everybody, it's Alyson Wall, your real estate strategist and realtor for the South Denver area. Now that we are thankfully out of what feels like the longest month of the year, let's dive into February's numbers. Denver saw 4,100 new listings hit the market. This is up 2,300 homes from the month before, or up 130% month over month. Compared to year over year, we're also up 28%. 2,900 homes went under contract this month. That is up by 600 homes, or 29%. Compared to this time last year, the change is only 2%. The market had 2,100 closings this month. That's down 700, or off the mark 25% from the previous month. But compared to this time last year, closings are still up 7%. Weeks of inventory increased by more than a month. Yeah, so with all of those new listings that hit the market, we went from 2.5 months of inventory to over 3.5 months of inventory. So everybody was waiting until we turned the calendar into this new year, and then we saw a lot of fresh inventory flooding the market. The days on market is telling us, though, that the buyers are not there snatching them all up. We saw days on market still increasing. The average days on market increased by 4, and the median days on market increased by 5. Okay, so what do February home prices look like? The average closed price for all homes is $668,000. This is down $11,000 from the month before. That puts us down 1.5% month over month, but still up 2% year over year. The single family home price average is coming in at $750,000, which is down $7,000 month over month. So it's off the mark, just shy of 1% from the previous month, but still up 2.5% year over year. The condo and townhome average price is rolling in at $437,000. This is also down $7,000, so 1.5% off from the previous month. And if you've been tracking with me, you're not going to be surprised the attached home market is down on average 5% year over year. All right, moving over to those median home prices. The median sold price of all homes in the Denver market comes in at $572,000, down $3,000 from the month before. The month over month change is negligible, but we are up 1.5% year over year. The median single family home price is coming in at $630,000, down $5,000 from the month before. So it is down month over month by less than 1% and up year over year by less than 1%. The median price for condos and townhomes is coming in at $399,000. It's actually up by $9,000 month over month. So we're seeing a 2% increase month over month and a 2.5% increase year over year on the median in the attached homes. Even though it's early in the spring market, this probably shouldn't surprise anyone. We are seeing that list price to sales price ratio slowly inch upward. I mean, we haven't even moved 0.5%, but we are seeing that there is ever so slightly a little less favorability toward the buyer, as sellers know that there's going to be a little bit more demand for at least newer properties. Now, stuff that's been sitting there is still a whole lot of leverage. But when there is something fresh on the market, the buyers are going to be coming in with a little more oomph and excitement to grab the things that haven't been languishing. And so we see that list price to sales price ratio starts to just push up a little bit more, and that stays true and gets stronger and stronger the farther we get into the spring market. All right, well, that wraps up the data part of the market. So what are your takeaways? Well, for me, the biggest surprise out of all of this is that we actually are seeing the pendings, the number of homes that went under contract, just a tick higher than we were at last year this time. Because when we were in the January, February market of 2024, we were seeing multiple offers, we were at a fast pace, we had tighter inventory, and I'm thinking, this is a slower market. We are coming out of a change of administration. We are seeing buyers feel more conservative. We're talking to a lot of buyers who are just putting their toe in the water, talking about summer. Everything is just a little bit more timid. But yet the data is telling us we actually have more activity. What I can attribute that to when I look at this is that we have so much more availability in the market. And so the buyers have the availability to negotiate with the seller and get credit so they can have a buy down on the rate. They can get some other things that are more favorable, getting them very close to actually where we were interest rate wise last year in the market, maybe even better if they're getting that 2-1 buy down, because rates are still close to 7. When we had that dip last year, I've talked about this so many times, we had been at 8 in October. We went down to around 6.2 for a short bit, and it really just blew up the market for a few weeks. Now we're at 7. If you can negotiate with the seller and you can get a 2-1 buy down, that means you're going to 5% for a whole year, 6% on the second year, and you're not back to 7 for, a full 2-year window, with the idea that somewhere in there you're refinancing as you capture the rate as it dips. And so I think for all of those reasons, because we have people who've been on the market, sellers who've been on the market for a while, and so much inventory to play with, that it was really neck and neck. But I did not expect us to have a number like that compared to where we had been last year. So that to me was the surprise, along with the fact that we had 4 more weeks of inventory hit the market since we entered 2025. So that is a lot, and buyers are feeling it, along with sellers I'm talking to. I just had someone reach out to me today and tell me they want to list. And when they were just poking around at some things and they said, my gosh, I'm just trying to figure out where I want to price the house, what I'm thinking the value is. I want your opinion. But I was looking at what I want for my house, and I feel like there are houses that look nicer and are priced lower than where I got my house just a short bit ago. So please tell me what's going on in the market. And they felt like there was just so much inventory early in the year. And that is a reality too. So what is going to happen with inventory as we move into spring? There are still sellers planning to pace their home onto the market in what is more of the peak buying season. We just have had Super Bowl. Just had it, and this is when more sellers plan to hit the market. It is also when more buyers plan to hit the market. The closer we get to when summer is, when kids that are already living somewhere and in school are transitioning out of that and it's comfortable to move families, that's when we get more and more and more buyers into the market. But are we going to get enough buyers to eat up these 4 weeks we already added in along with the sellers that are coming? So one of the things that happened last year, we got to April and we had a huge surge of inventory in the market. So we've seen a lot of sellers trying to come in early. What that did was push up our inventory early. We've seen an increase in days on market. Yeah, it's winter. There's a part of that too. But we have all these sellers trying to kind of beat the market. And it gets a little hard on them because there aren't a lot of buyers right now coming in to eat up that inventory. So if you don't price aggressively, you don't look amazing, then your home sits and you're getting less than you want. So there is something valuable to waiting and coming in a little later. But if all the sellers do that, we're going to have another surge of inventory. Are we going to have enough buyers to eat it up? So is it possible we have a really high inventory year this year? And if the rates don't come down, we don't have enough buyers to come in and take that. So it becomes a buyer-friendly year again this year, maybe even more so than we thought we were going to have last year. It's possible. I'm going to be very curious to watch how this plays out, because the anticipation had been all year in 2024 that 2025 was going to be the year where we really saw rates drop, and we are not. So very curious. The one thing I do want to share is that I do think, as I have shared, that this is going to be the year of the builder, because they offer so many incentives for coming into those new construction homes, spec specifically. I've had several clients go the dirt build route and be a little disappointed with what they were able to get or negotiate with the builder. Though I'm telling you, they were still getting $60,000 and $70,000 off, which in the peak market, we were looking at $15,000, $20,000. So the builders are still delivering quite a bit of value at the dirt. So don't give up. But it's not like we're seeing in terms of rate buy down and getting that monthly out-of-pocket expense shifted like you can get on a spec. But this is what the town of Castle Rock had to say about new construction permitting and inventory. And Castle Rock is really where the crux of new construction is happening in the South Denver area. Parker's got stuff, but they're not in the same position. And when we're looking at where you go to get a new build, Castle Rock's really the heart of it. So let's look at this. Again, I'm going to read this because this is from the town of Castle Rock and their development department and team. Development growth in the town of Castle Rock continues to reflect economic trends, with a notable slowdown in new construction and overall permitting activity in 2024. The town received 159 new development and other applications in 2024 compared to 230 in 2023. This marks the third consecutive year of decline, with the 5-year average standing at 237 applications. Building permit applications also saw a slight decrease last year, with a total of 4,200 roughly applications submitted. This figure is just below the 5-year average of 4,500 applications. Of those permits, 371 were for single family homes. That one's the super important one. 371 were for single family homes, representing a 7% decline from 2023 and a significant drop of 56% from the 5-year average. When considering both single family and multifamily permits, a total of 415 dwelling units were permitted last year. This reflects a 39% decrease from 2023 and a 64% decline from the 5-year average. Looking ahead, it is anticipated that development growth will continue to occur at a slower pace in 2025. They did insert a line right before the closing that said, Southeastern Castle Rock, including Crystal Valley and Montaigne, were the only areas in town to see an increase in permitting activity. So, for those of you looking for opportunity where you're going to see not a slowdown, that means we're mostly looking at Toll Brothers. That is who is building predominantly in Crystal Valley new construction, along with a large semi-custom high-end multi-million builder and Montaigne. Now, don't let all of this inventory talk fool you. As I mentioned, we were seeing our list price to sales price ratio tick upward. Our weekly data is showing that price reductions are slowly decreasing. This week's data told us that fewer than half the homes that went under contract had a price reduction. In the previous weeks, we were well over half the homes had had a price reduction, and a significant portion of those had had multiple price reductions to get under contract. And when we're tracking our home selling probability, right, the chances of a home selling in the next 30 days, we are seeing an uptick. When we compare it to this time last year, it doesn't look as good, but I just shared our dynamics of last year were very different. But our trend is upward from where we have been. So we are moving into our spring market, and it is a more active, a more positive, a more seller-friendly dynamic. But buyers, you have not lost your positioning. It is still going to be buyer-seller dance. Both sides have some power, and it's really going to depend, sellers, on how you position your home. There are aggressive offers coming in. There are homes going under contract in 2 and 3 days. I have a listing getting ready to come, and I'm looking at the comps around it for the homes that have come on in just the last couple weeks. They're going in under 9 days in this particular neighborhood. So it's so much to do about positioning. It's possible to sit there for 60 days, 90 days, and it's possible to go like that. If you have questions about the market, what's going on, how to strategically position yourself, buyers, how to get what you want and get it quick, please reach out. I would love to connect, and I will see y'all next week.